Hello, welcome back to our channel with a new content. Today we'll be learning about the three golden rules in the accounting.
We'll be discussing about the three golden rules of accounting today. So, what are the golden rules and why do we actually call them as a golden rules? We'll be understanding. Golden rules of accounts. So, there are three golden rules as discussed. One is personal account, the second one is real account, and the third one is nominal account. So, what is personal account? This personal account deals with individuals and it also deals with the individual factors just like artificial or natural or artificial. Natural and artificial. What do I really need by mean by the natural is a person who is having the natural existence, or the person who is actually alive is called as natural individual, and the artificial individual is something which is under the rule or which is under the existence by the papers, or which is under the existence with the incorporation or the registration, just like a firm or the company, right? So natural is a person and this is the company. The artificial is a company which is only having the existence with the registration. Okay, so what is a real rule or real account? Real account deals with the assets. The real account deals with assets and liabilities, right? It actually deals with assets and liabilities. What are assets? Assets are something which actually gives the value in return. Liabilities are something which actually reduces the value of the particular thing on the periodic basis is called as liability. Okay, so what is nominal account? Nominal account deals with income and expense. What does nominal account deals with? Income and expense. Right. So now let's understand what is the credit and debit notes for this following accounts. So what is debit and credit? Let's say here personal account. Personal account means debit the receiver and credit the giver. Remember it. Debit the receiver, credit the giver. And what about this real rule or real account? Debit what comes in, credit what goes out. And what is about the nominal? Debit all expenses and losses, credit all gains and profits, or we can even say income. So now what is the personal account stating? Debit the receiver, credit the giver. And what does this real account really speaks about? Debit what comes in and credit what goes out. And in the nominal account, what does the debit says? Debit means dr and the credit means cr. I have written like this: debit all expenses and losses, credit all gains and incomes. Okay, till so far it is fine, but how are we going to implement? In the accounting we always believe one thing, that it is we will be just journalizing the things in the form of business entity concept. Business entity concept. What is business entity concept? Business entity concept is something where we always have to think from the business aspect or business point of view. We should always be thinking from the business point of view. Okay, so this is what the business entity means. So now let's say, let's write one entry. So here uh, Pawan has started a business with cash. So what this statement says? Pawan has started a business with cash. So what are the phrases which resembles the personal account? What is personal account? Personal account means it will be speaking about the artificial and natural persons. So here Pawan is a natural person and business is a artificial individual. That means natural and artificial individuals, we see both of them here. So that is the personal account. And what is the real account we see here? It is the cash means it is an asset. So when we actually see how where the assets and liabilities are jotted, it is sorted in the real account. Okay, so how are we going to write an entry for this? Who are going to be debited and who are going to get credited? We'll see. So what, as per the personal account, what is a debit and what is credit? Debit the receiver and credit the giver. Okay, so who is receiving? And again, before we write, we have to always follow the business entity concept. Okay, so I'll treat myself as a business. So what business is receiving? What business is receiving? Cash, right? What business is receiving? The business is receiving the cash, correct? So what we have to write here? Business account debtor to cash account. So why did I write this entry, or how did I write this entry? Okay, let me explain by writing the narration. What is narration? Being business started with cash. Right? Or we can even say it here, to Pawan's cash account or Pawan's bank account. Right? So here we can write it like this. So how did I write this entry? Because business debit the receiver and credit the giver. In first place, who is receiving? Business is receiving. So debit the receiver. Sorry, debit the receiver, right? Debit the receiver. Who is receiving here? Business. So first debit the business account data. Two, credit the giver. Who is giving? Who is giving? Pawan is giving, right? But here the cash is the real account. So as per the real account, what it is? Debit what comes in and credit what goes out. Hold on. What happened? Yeah. So what happened here? Debit what comes in and credit what goes out. What debit what comes in as per the real account. Debit what comes in, credit what goes out. So from the Pawan's bank account, cash is moving out into the business. So business is receiving it, we have debited it, business account data. As cash is moving out, we have to credit it. So we have credited it. So to cash account, to Pawan's or to Pawan's bank account. This is what we actually frame the entries. And these are the three basic rules or the golden rules we usually call it in the accounts. So what are they? Personal account, real account and nominal account. What does personal account says? Debit the receiver, credit the giver, and the real account says debit what comes in, credit what goes out. And nominal account says debit all expenses and losses, credit all gains and incomes. Right?